Hey everyone, and welcome back to Collin Investing, the channel where we decode the complexities of the financial world and turn them into actionable insights. Today, we're diving deep into a whirlwind of events that have sent shockwaves through the global markets. We're talking about trade wars, a potential new sovereign wealth fund for the US, and some serious AI developments. Buckle up, because this is going to be a wild ride. First up, let's talk about the elephant in the room: trade wars. It seems like we've been transported back to 2018 because tariffs are back in the headlines. Trump, true to his tariff man persona, has slapped new tariffs on Canada, Mexico, and China, and even threatened the EU with the same fate. This initially set markets into a tailspin, with the Mexican peso and Canadian dollar taking a hit. Canada and Mexico were quick to retaliate, announcing their own tariffs on US goods. Canada even went as far as to cancel a $100 million Starlink contract and ban the sale of US liquor in Ontario. Talk about hitting where it hurts. But then, in a dramatic turn of events, both Mexico and Canada backed down after some good old-fashioned phone diplomacy with Trump. They agreed to increase border security to combat drug trafficking, and in return, the US delayed the tariffs for a month. So, what does this all mean? Well, it's a clear indication that trade wars are far from over, and they're likely to be a recurring theme. This creates a lot of uncertainty for businesses and investors, as it can impact everything from supply chains to consumer prices. It's also a reminder that geopolitics can have a massive impact on the markets, and we need to stay on our toes. Now, while the trade war with Canada and Mexico might be on a temporary hiatus, the situation with the EU and China is still brewing. Trump has hinted at imposing tariffs on the EU soon, and they've warned of retaliatory measures. This could escalate quickly, especially considering the EU's reliance on US security. As for China, while here is talk of trade negotiations, the 10% tariff is seen as a way for Trump to exert pressure. It seems both sides are open to dialogue, but the situation remains delicate. Amidst all this trade war drama, here is another major development brewing: a potential sovereign wealth fund for the US. Trump has signed an executive order to explore the creation of such a fund, and it's not just a spur-of-the-moment decision. Apparently, both Trump and Biden's teams have been mulling over this idea for a while. The idea is to use revenue from tariffs to invest in strategic industries, strengthen supply chains, and potentially even act as a stabilizer for the stock market. Now, this is a big deal. The US, unlike many other countries, doesn't currently have a national sovereign wealth fund. This is mainly due to its reliance on private investment and its history of running budget deficits. But with the current trade landscape and the unique position of the US dollar, things might be changing. If this fund becomes a reality, it could have far-reaching implications. It could be used to support domestic industries, counter foreign influence, and even become a major player in the global markets. Imagine a US sovereign wealth fund rivaling the likes of Norway's or China's. It's a fascinating prospect, but there are also concerns. Critics worry about potential political interference and the lack of a clear funding source. Given the US's massive debt, let's shift gears and talk about AI. Palantir, the AI and data analytics giant, just reported stellar earnings, sending its stock soaring over 20% in after-hours trading. The company beat expectations on both revenue and earnings, and is bullish on the future of AI. CEO Alex Karp even stated that this is just the first act of the AI revolution. Palantir's success highlights the growing demand for AI applications across various sectors, from defense to commercial businesses. It also suggests that the AI investment landscape is evolving, with a shift from infrastructure to applications. This doesn't mean that infrastructure investments are dead, but it does imply that the real explosive growth might be in companies that are developing and deploying AI solutions. In other AI news, OpenAI has launched a new AI agent called Deep Research, designed for in-depth research tasks. It's like having a super-powered research assistant that can analyze vast amounts of data and provide comprehensive insights. This could be a game changer for professionals in fields like finance, science, and policy, but it also raises questions about the potential displacement of human analysts. Now, let's touch on some specific companies. AMD, the chipmaker, is at a critical juncture. Its upcoming earnings report is highly anticipated, and the market has set a high bar. There are concerns about a potential slowdown in AI chip demand, especially with Microsoft and Meta possibly scaling back their investments. AMD's stock has been under pressure, and the earnings report could determine its near-term trajectory. Tesla and Apple, two tech giants, also had a rough day. Tesla's sales in Europe showed signs of weakness, and the company acknowledged that tariffs could impact its profitability. Apple, on the other hand, is facing the direct impact of Trump's tariffs, as it wasn't granted an exemption this time around. Both companies are navigating a challenging environment, and investors are closely watching their performance. GoDay is another company on our radar. With its earnings report coming up, the focus will be on its advertising revenue and cloud growth. Given Meta's strong ad performance, here is optimism about Google's ad business. However, the cloud segment is a question mark, especially after Microsoft's cloud growth slowed down. The market is pricing in a potential 6% move in either direction for Google's stock after the earnings. On the economic data front, the U.S. manufacturing sector showed signs of life, with the ISM manufacturing PMI expanding for the first time in 26 months. This is a positive sign for the U.S. economy, suggesting that it might be more resilient than previously thought. Additionally, a Gallup poll showed that Americans are surprisingly optimistic about the economy and the stock market under Trump, with many expecting further gains and lower inflation. The Japanese yen is also worth watching. The Bank of Japan's recent minutes revealed a more hawkish stance, with policymakers expressing concerns about inflation and the weak yen. This suggests that Japan might be moving closer to raising interest rates, which could have implications for global markets. So what's the bottom line? The global financial landscape is incredibly complex and dynamic right now. We have trade wars, potential new financial instruments, rapid AI advancements, and shifting economic indicators. It's a lot to take in, but here are some key takeaways. 1. Trade wars are back, and they're likely to be a persisting feature of the investment landscape. Asterisk. This creates uncertainty and volatility, but it also presents opportunities for those who can navigate the complexities. Pool. The potential U.S. sovereign wealth fund is a major development to watch. Asterisk. It could reshape the global financial order and have significant implications for various industries. The tree, AI, is rapidly evolving, and investment focus is shifting from infrastructure to applications. Asterisk. Companies like Palantir are leading the charge, and we can expect more exciting developments in this paper. Specific companies like AMD, Tesla, Apple, and Google are facing unique challenges and opportunities. Asterisk. Their earnings reports and strategic decisions will be crucial in shaping our future performance. 5. The U.S. economy is showing signs of resilience, but there are still risks on the horizon. Asterisk. The manufacturing sector's rebound is encouraging, but inflation and interest rate movements remain key factors to monitor. Geopolitics is playing an increasingly important role in the markets. Asterisk. From trade wars to central bank policies, global events can have a significant impact on investment returns. That's all for today's deep dive into the markets. I hope this video has provided you with valuable insights and helped you make sense of the current financial landscape. Remember to do your own research, stay informed, and make investment decisions that align with your risk tolerance and financial goals. Before you go, I'd love to hear your thoughts on these developments. Do you think the trade wars will escalate further? Are you excited about the potential U.S. sovereign wealth fund? What are your predictions for AMD, Tesla, Apple, and Google? Share your opinions in the comments below, and let's get a conversation started. And as always, if you found this video helpful, please give it a thumbs up, subscribe to the channel for more in-depth financial analysis, and hit that notification bell so you never miss an update. Thanks for watching, and I'll see you in the next video.